RBI has increased the repo rate by 35 basis points. Repo rate has increased. Will the interest of our loan increase too? If interest of the loan increases, will our monthly EMI increase? If you have all these questions in your head, then this video is for you. Hello and welcome back to Freedom English channel. This is Sanaram. In this video, we are going to understand what repo rate is. And apart from that, we also will understand what happens when repo rate increases or decreases and how it actually affects our loan's interest rate and our monthly EMI. So all these will be covered in this video. But before that, in case if you are not subscribed to our channel, go ahead, subscribe our channel and click the bell icon. First, what is repo rate? What do we do when we are normally out of cash? We go to bank and ask them to lend us some money. And when the bank is lending us the money, it charges us a certain amount of interest. Correct? So when bank has money, it will lend the money to us. But when the bank is out of money, what it does? Bank normally borrows the money from Reserve Bank of India. So here, Reserve Bank of India, when lending the money to the bank, will also charge a certain amount of interest, and that is called the repo rate. So basically, RBI lends money to the bank when the bank is not having enough cash to lend it to us, which are the public people. Then that time the RBI actually charges a certain amount of interest, and that interest is called the repo rate. So basically, the interest which the bank charges on the public when we are borrowing money from the bank depends on the repo rate. So we understood what repo rate is. What is repo rate? It is very simple. The interest which the RBI charges when it is actually lending the money to the bank is called repo rate. Okay, now I'll give you a small example here. If the repo rate is 6%, which means RBI is lending money to the banks with the interest of 6%. Banks need to have some profit, correct? So when we go and approach a bank and ask them to lend some money to us, the repo rate is 6%. So they have to keep a margin here. So they might keep 4% as margin, and together 10% will be the interest which we will be paying to the bank. So basically, when the repo rate increases, banks will also increase the interest rate which we have to pay there. So our interest rate which we are paying will increase. And if the repo rate decreases, the interest rate which we are paying also will decrease. So it's like a circle, I would say. So now we have understood what repo rate is. And we also understood when repo rate increases, the interest which we are paying also increases. And when the repo rate decreases, the interest which we are paying also will decrease. But now, if you ask me, I want to take a loan right now, maybe a home loan, and the tenure is going to be around 20 years. But I want my interest to be fixed. I don't want it to fluctuate. Repo rate, whether it increases or decreases, should not affect the interest which I am going to pay on the loan which I have taken. If you keep this question in front of me, I would like you to understand two things here. So when you're borrowing money, which means you're taking loan, let us assume it is a home loan. We're taking it for 20 years and the interest rate which we are signing at the time of taking is 9%. Everything is good, our credit score is good, so we get the home loan. And if we opt for fixed interest, the name itself says, when we opt for fixed interest, we will be paying the same interest which is 9% throughout the tenure for 20 years. Repo rate increases or decreases will not affect the interest rate which we are paying. But on the other side, we have another type of interest, and that is called floating interest. As the name again says, this actually floats, which means the repo rate goes up, this interest will also increase. So you might have signed in for 9%, but since the repo rate has increased, it might rise up to 10 or 11, or depends completely according to the situation. But if the repo rate decreases, you might end up paying again 7% or 6% interest rate on the home loan which you have taken. So basically, the thing is, when you're opting for the interest, you have two choices here, fixed or floating. So if you don't want the repo rate to affect your interest which you're paying and you want to pay the same throughout the tenure, you should opt for fixed interest rate. And when it comes to floating, you should always know the repo rate increases, you will actually pay a lot of interest. But if the repo rate decreases, the amount of interest which you are paying will decrease. But one thing is here, let us assume you have taken fixed interest. The neighbor who lives beside your house has taken floating interest. And now the repo rate has gone down. So your neighbor will actually pay lesser interest. And now if you want to switch it, trust me, few banks give this facility. Like you can avail this facility, which is you can actually switch from fixed interest to floating interest. Because normally we know now what is happening. The repo rate has gone down. So my neighbor is paying less interest than what I am paying right now. I am paying the same 9% now. But my bank has an option by using which I can actually change my fixed interest to floating interest. But we should remember, not all banks have this facility. Only few banks have this facility. But if you have this wonderful opportunity, you can avail it. Okay, so till now we have understood what repo rate is. What is repo rate? RBI charges a certain amount of interest on the money which it is lending to the banks. That is called repo rate. So keeping a margin, these banks will charge the interest from us when we are borrowing money from the bank. So when repo rate increases, the interest which the bank will charge increase. So our monthly EMI increases. When repo rate decreases, everything goes down. So let us assume we have taken a 50 lakh home loan and the interest which we are paying right now is 10%. So we will be paying a certain amount as EMI, right, which is monthly installments. If this 35 basis points is added, what would be the amount which you will be paying right now, or how much will be increased? I am going to show that through screen recording as an example for you. Okay, so I have opened home loan EMI calculator and I have put in the loan amount, which is 50 lakh, and the tenure is 20 years. The rate of interest is 10%. So the monthly EMI which we would be paying is 48,251. Now I'm going to change this interest rate to 10.35%, which is the 35 basis points which has been increased. So once this is done, we will be paying 49,416. I'll show you again. If the interest rate is 10.35 along with the basis points which has been increased by the RBI right now in the repo rate, it is 49,416. And if I remove this 35 basis points, which is 10%, it is 48,251. So this is the difference in the amount which we will be paying extra every month. So with this example, you would have understood how you can actually add the 35 basis points in the interest rate which you have been paying previously before the repo rate was actually increased. So if you have other loans, you can actually calculate and see how much monthly EMI would increase and how you can manage your financials accordingly. So in this video, we have understood what repo rate is. What is repo rate? Very simple. RBI lends money to the bank and they charge an interest, and that is repo rate. So depending on the repo rate, banks will keep a margin and charge the interest from us, which is the public, when we are borrowing money from the bank. So when repo rate increases, our interest will increase. When repo rate decreases, our interest will decrease. So same way, our monthly EMI will also increase and decrease. And we also understood what is fixed interest rate, which is that throughout the tenure you will be paying the same interest. And floating interest rate is something which also fluctuates according to the repo rate. So with this point, I finished my video. I believe this video was helpful for you. If you like this video and you understood what repo rate is, please give us a thumbs up. And if you think it will be beneficial for others, go ahead and share. And in case if you're not subscribed to our channel, subscribe our channel and click the bell icon. And Freedom app should be there in your phone. If you ask me why, it is kind of like a mentor or a guide, I would say. And we have 3 different categories or separate vast categories, which is farming, business and personal finance. So we have 900 plus courses available on this app. And mentors are there. They are going to train you with their life experience, which means you will walk through their life. You will understand how they actually became so successful in their business, or how they are actually managing and creating more wealth for themselves. So all this can be understood by you just by seeing the courses. All you have to do is understand, implement it in your life and change your life just like that. With this point, my video comes to an end. I'll see you again in the next video. Until then, you guys take care and bye-bye.